Why are you stuck in stock picking? And here's how to fix it. If you have taken classes, courses, online courses, or even watched thousands of videos, but you're still stuck, not sure what to buy, when to buy, or the very reason why are you even holding it in the first place, I just want to tell you that you are not alone. The problem isn't you, but it's because information is now all over the place. Hi everyone, my name is Yuan Cheng. I'm an investment coach. If you stick around in this video, I'm going to share with you my framework and how I help my students to overcome this problem. You will need to understand how a company actually makes money, why you will still be standing around in the next 5 years, and of course you have to understand how competitors are coming into the scene and how they can keep competitors away, and lastly, is it a good price to pay for the company you pick? The copycat trap. For most investors, they are in this copycat trap because they follow somebody else. They follow people who gave a lot of opinions about certain stock that is rising fast, making huge gains. And at the same time, when the market starts coming down, they are usually lost and do not know how to go around fixing it. So in most cases, courses teach formulas, ratio, or even a simple spreadsheet for you to key in. The truth is, if it was enough, everyone will be rich. I also met a lot of investors who are currently sitting on a big pile of cash, even though the bull market has started a couple of years back. And due to the recession fear, they are constantly reluctant to invest their cash in the market because of fear, because of uncertainty. So a lot of times, it's also because they don't have a framework, or even when they have the framework, they do not trust their own research and they lack the conviction to proceed on. So spreadsheet itself is useful because it helps us to understand the company in terms of their financials performance. But if you don't understand the business model, why this company can beat the competitors or even the people that is running the company, you will always feel empty. This is especially true when the share price starts to come down and you do not want to average for the sake of doing it. Here are the 3 major pitfalls in business model analysis. Number 1, superficial. You have a very surface level of understanding, like just how the company's revenue are coming in, but you do not understand how exactly where they generate those profits. You also do not have a clear idea in the competition landscape, who are the real competitors, and especially if the competitors are private. You are not able to understand the business unique and sustainable model, and of course you are not able to see in the marketplace how competitive or what other competitors are there. And lastly, when there are new technology, products or services in the marketplace, how are the response on the ground, or how likely is the business going to be affected? In order to solve all these problems, I want to share with you a framework that I have picked up along the way. And these are the 4 main considerations that we have. Number 1, we look at the growth opportunity in the business. Number 2, we look at 7 powers, which is known as economic modes, to identify whether the company has sustainable advantage. Number 3, we look at the people and the culture of the company. And number 4, we look at the business itself, whether is it at the right price to pay. Growth opportunities. And here are some questions that I asked in order to help me in my research. Number 1, can a company create new product or service, or are there still markets that they have yet expand into over time? Right, so let's take a look at the example Apple. So Apple itself, over the years, we've seen that they have launched multiple new products in the market. And some products work well, some products didn't work well. But what we understand about Apple is that it's a very innovative company. They are constantly looking at ways to bring up the features, to bring up the benefits to user, so that it helps users to solve what they are facing. And over the years, many people have grown to know Apple and their product to be very reliable. So this is one of a very simple way that we see in Apple. And over time, as they launch new and new products, they open a new demographic, they open new markets, and where they can attract more customers. Number 2, customer experience. Does the product or service meet customer needs and provide a great overall experience? Now, why is it important? Because at the end of the day, the product must fit. And if you are paying customers, do you want to buy Apple products today? If not, why? Let's take a look at how I do my investment research. I move away from looking at traditional numbers to find answers on the ground. And there are many ways to do it. One of the ways is to join communities or groups. And Facebook itself is a very good source, because today there is this Apple Vision Pro official group that was formed, and they have thousands of members that are interested in Apple Vision Pro. So back then when Apple Vision Pro was launched, I joined this group, and all I was looking for was what are sentiments on the ground. And after people have purchased Apple Vision Pro, are they still happy and excited about it? So what you have to do is, once you join some of this group, you can actually take a look at those comments. And comments itself are based on real time, on the ground. What do people feel and how are the communities reaching out. And this is what I meant where people are interacting and you are able to move beyond certainty that this product has reached the consumers and how are their first response. Last question. Adoption speed. Is it easy for customers to start using the product, or are there big hurdles like high costs or complex changes? And now we know that in the marketplace, Apple is selling Apple Vision Pro at a premium, which is $3,500 against Meta, which have Oculus and Meta Quest. They are selling slightly below $1,000 today. So if you look at the whole distribution, how does Apple actually distribute the product? It's pretty easy because Apple have a lot of Apple stores throughout the world, and also other Apple reseller stores. But the hurdle itself, I believe, because Apple is charging a premium, it may deter some consumers who have limited budget to actually spend on Apple products. Now, one of the things that I do in my research is to look at videos, look at interviews, and this is from YouTube where they talk about their product innovation, their products development, and it's almost a year ago, Apple has already been involved into getting AI ready in all their products. This means that with the innovation that Apple has, they're able to launch all these and implement these changes easily in the marketplace. And that's why with these three questions itself, it allows us to see if Apple is still relevant and will they be able to capture the growth ahead. And understanding the answers from these three questions in this video, I hope that it helps you to think about the company that you pick, whether the growth opportunity still exists. Next, let's move on to 7 powers. 7 powers is kind of like a competitive edge that allows the company to defend against their competitors. So growth may be great, but at the same time, there are a lot of copycats, or there are a lot of competitors that have the financial means to compete against Apple. Now, if you look at growth itself, what we want to really understand is whether is the growth sustainable by the competitive edge that this company have. So imagine that this is the castle and Apple is the castle itself. Do they have the means to keep competitors, which is like enemies, coming into the castle? Now, if you have no idea about 7 powers, it's actually written by Hamilton. Here are the different types of 7 powers. We have number 1, economies of scale. Number 2, network effects. Number 3, switching costs. Number 4, counter positioning. Number 5, cornered resources. Number 6, process power. Number 7, branding. Now you may pause this video to understand deeper about each of the 7 powers and think about whether the company that you bought has all these powers. Now let's take a look at branding against Apple. Apple sells iPhone. It's actually one of their biggest revenue contributor. If you look at the pricing itself against in your own country, they are usually selling at a premium against other competitors. Now why is it that Apple is able to command such a price? Because it invokes certain emotion, it attached to the consumer mind, and over the years, as their marketing efforts has paid off, the brand value itself has increased tremendously. And that is why when we are reading about certain investment framework, we want to link it to the real world to look at true examples that can help us to relate and understand the business model better. Economies of scale. Now, as seen in one of the 7 powers, economy of scale means as the production increases, the unit cost itself goes down. But when we look deeper into Apple and the business model, Apple actually have a massive purchasing power because of the scale and the size where they sell millions of iPhones. So this allows them to negotiate with suppliers, contractors, right, to actually extend payment terms. Now, how does it benefit us as stock investors? Because when you look at this chart, this is actually a cash conversion cycle. It's actually a matrix that represents how a company pays the suppliers and how long does it take for them to receive cash from the customers. So in this relationship itself, cash conversion cycle is actually in Apple case, it actually represents the inventory where they take the goods from the supplier and sold it in the marketplace. And today, Apple has a negative cash conversion cycle. And if you look at it, it has actually improved over time. In other words, it is the vendors itself, or rather the suppliers itself, that has been financing the business and the business operation. This is very good for Apple because they do not need to have huge cash upfront to pay to their supplier. Now, with this understanding about the economy scale, do you think that Apple actually have competitive advantage in the marketplace? Now, don't get me wrong, Apple take years for this supply chain dominance to establish over time. Next, let's talk about the people and culture. Now, when you are investing, spend time slowing down to understand the people as well as the culture, right? Because any part about growing a business is very challenging, and when tough time comes, we actually see people quitting. We see the CEO that is with the company has suddenly left and the share price collapsed. And usually the shareholders are the one who suffers by holding on to the stock. Over time, after reading about CEOs, I compiled several traits listed here. Passionate leader who cares really a lot about the mission of the company, the greed, right? The ability to persevere, the courage to speak up, to share about things and information, show vulnerability, especially when times are tough or when things doesn't go well with the company. And one of the best part is whether they have the heck care attitude whenever they are on the earnings call talking to certain stocks analysts from investment banking. Now, why are all these traits important? Because the CEO will be talking, will be representing the company during interviews, during live shows, during the earnings call, and this gives us clue what kind of person and how they talk and behave. If you look at some of the past action taken by Tim Cooks, and we understand that Apple has actually been going through a very difficult times. Apple has been going through a fluctuation in their sales, and looking at this, Tim Cook actually requested for a 40% pay cut after the shareholder vote. If you dig further into the article, it's actually Tim Cook himself who requested the change. Now we know that when a company does better, CEO will get compensated well. But at the same time, when the company's sales are actually slowing down or fluctuating, Tim Cook actually requested this change. Do you want to find a CEO who is aligned to the shareholders? Next, we talk about valuation. Now, valuation is not just about looking at whether today the stock is overvalued or undervalued. It's also a good time to really understand that how can I narrow my assumption looking at all this information about the company. Is the company growth going to be sustainable? Now, sustainable can be a very vague word for a lot of people. So how can we use valuation tools to help us? Number one, if you look at a lot of different financial sites itself, they actually give you price target. But why most investors don't believe in the price target is because if the share price starts going near the price target, they feel good. But when the share price starts going against them or even below their cost price, they will start to lose their trust about the price target. Now in this case, the price target for Apple could be around 252 today. Is it really achievable about this price target? When we look at the valuation itself, this is a discounted cash flow calculator, and when we use it, we want to use the free cash flow as a basis. Now if you don't know what free cash flow is used for, free cash flow can be used to do share buyback. It allows the company to do acquisition and even declare dividends. So measuring free cash flow instead of using profits itself, it allows us to take a deeper look about the sustainability about the company's action that Tim Cooks and the management has taken. So how do we narrow our growth and forecast? Well, over time, there will be different scenarios. You can actually estimate based on the bear case where if the company management has certain growth rate, you can actually lower the growth rate so that you have a more conservative assumption when you are keying it into a calculator. Of course, there are times where companies surprise us, where their market or the strategies they have taken in the marketplace has turned out really well. We also need to set a bull case target so that there are rooms for the company's sales and growth to actually reach a certain height. And that is why for valuation, it's not just a tool for us to understand whether the stock is undervalued or overvalued. We look at it as a function for us to know how likely is it going to happen in the future. Now, over time, as I spoke to many different investors, over time, what leads to poor investment decision? Now, today, if you look at some of the psychology that affects our investment decision, we have loss aversion, where a lot of investors feel emotional because as the share price is coming down, they look at their account, they look at their brokerage account, they see that there are losses, and some of them feel that the pain of loss is actually scary. Confirmation bias. A lot of people want more and more information, more confirmation where a positive news lead to a positive movement in the share price before they want to take action. Anchoring. Now, anchoring can be a piece of news that has happened in the past and they rely on it. Like example, Apple has a very good iPhone sales. And suddenly when the news comes out where Apple China sales has been coming down, they might not be able to understand like what are the action that the company is taking to transit over this situation. Sometimes anchoring can be based on price, where example, you used to buy a stock at 50, you sold it at 100, and then eventually when the share price keep rising, you do not dare to come in because your last price that you sold was deemed to be acceptable. And that is price anchoring. Herd mentality. By following the crowd even when it goes against your own analysis. Sometimes it may be that you do not have enough information, but because the price has been going up and you kind of rely on your gut feeling, it's not when the price is going up, it's often when the price is going down. People don't see the opportunity as it used to because the narrative has changed in the marketplace. And here's one of my students, her name is Brenda. I actually have a video testimony and I put a link around in this video. So for Brenda, she has been struggling to pick stocks despite attending different courses out in the market, and over time she lacked of confidence to actually understand the company that she has in her portfolio. In order to help Brenda, I suggest to her to do deeper understanding about the company that she buys. If you are coming in as someone who just look at price but not the business, you'll not be able to form a clearer picture. So at the end of the day, what we want is really the clarity and to be able to make smarter decisions as time goes by. So one of the biggest psychology that a brand experience, right, during the coaching is loss aversion, because during that period of time, Apple's share price actually went down from 200 to 165, and during that period, Brenda actually chose Apple as a case study to do research on. There were tons of negative news that has surfaced, right? You have Warren Buffett from Berkshire. Warren Buffett selling Apple, and if you see some of the news back in Q2, Buffett sold a big chunk of Apple shares. Now for a lot of investors who follow Warren Buffett, it can be very hard to accept the fact that Warren Buffett is selling. Why are you holding or coming in to buy Apple? And we know that Apple do not have their own AI. How is it that an investor who is looking at Apple back then, comparing to Google, who has already launched Gemini, Microsoft who already launched Copilot, and Apple itself doesn't have any AI of its own? It's actually a very difficult time for investors to actually trust Timecodes and its management about Apple and its development. And of course, through the entire framework, as we have gathered evidence and information, Brenda is able to buy Apple back then at 170. And this is what she says. For the first time in her investing life, she knows what she's buying clearly. And if this is something that you are looking at, use the framework itself to be able to develop your own thesis and not be a copycat and follow others. And someone who picks stocks, right, here are some of the things that they struggle. Number one, analysis paralysis. Too many information, and sometimes it can be overwhelming because you may have someone who tell you to sell Apple, someone to tell you to buy Apple. You may be chasing something that is moving fast and quick. There can be a lot of emotion, especially when you buy your stocks without understanding or without doing your own homework, without proper diversifying your money across different companies that you truly understand. So what you can do in the next few steps is, number one, assess your own investment strength. What do you connect the most and what are your strengths at? Number two, get yourself educated, get yourself a coach to actually address all these different areas. And number three, apply them as you are progressing and look at how all this information can help you to make better decisions. If you want to take control of your own investment and not be a copycat investor, don't stay stuck. Click on the link in this video and let's book a coaching call to discuss about your current challenges and see what are the areas that you can work on so that you have a roadmap to be able to help you with your next few decisions. So what are some of the things you have to expect when you're coming for the call? Number one, we're able to address some of the issues that you are facing. Number two, be able to understand to be able to deeply understand the framework that is shared in this video. Number three, what are some of the tips and ways to actually build your conviction? And lastly, if you really need a coach, click on the link and book a call. I'll be happy to help you.